It's Julie Moon, Senior Research Analyst at Finovate. Today I'm joined by Joe Lichtenberg, Director of Industry Marketing at InterSystems. Joe, thanks so much for joining us today.
Thank you for having me. Thank you so much.
Yeah. So in this session, we're going to be focusing on navigating the financial services technology landscape. Today, there are literally thousands of fintech companies spanning a vast range of financial services use cases, and all of these companies rely on technology as a competitive differentiator. In today's interview, we're going to be providing an overview of the new technology landscape and be exploring how fintechs and banks are leveraging these various new services, including machine learning, blockchain, microservices, data fabrics, smart data services, and more to address today's most pressing business challenges. So Joe, let's just jump right into the interview. Tell us briefly about what InterSystems does, and specifically within the financial services sector.
Sure, and thank you again for having us. As an introduction, I'm Joe Lichtenberg. I'm responsible for all of our product marketing and industry marketing initiatives worldwide at InterSystems. So if you're not familiar with InterSystems, it's a data management software company. And the area of focus for us, we're typically focused on solving what are the more challenging data and integration and analytics and digital transformation initiatives for our customers. Mm-hmm. We have, as our customers in financial services, most of the top global banks around the world, and as well as large customers in other industries that typically have lots of data, very high processing requirements, the need for very high performance, very low latency with very high security requirements. Mm-hmm. Within financial services, our software is at the heart of a wide range of applications in the front office, the middle office, the back office. For example, on any given day, InterSystems software is used to power up to 15% of the worldwide stock trades. Wow. We're powering risk, reporting, compliance, portfolio management applications, and we're also used by some of the largest fintechs in the world. Mm-hmm. Our software is used in insurance, credit unions, retail banks, and so on. Mm-hmm. The other thing that I would say is our software is also used outside of financial services in other, what are typically heavily regulated industries that have high security requirements. So one example is in healthcare, where we have a very large footprint, different from financial services, but it's also a highly regulated industry. And our software is used to manage the electronic health records of more than 1 billion patients around the world. That's about 1/7 of the entire world's population.
Wow, yeah, that's a lot. That's a lot of behind the scenes important things going on. So obviously there's a lot going on in 2020 in the financial services sector. I'd like to get your perspective. What do you see happening these days in innovation in financial services?
Yeah, it's tremendous right now, for sure. I think everybody is aware of the level of innovation and the pace of innovation in financial services is higher now, I would say, than any time in the past. And we've been at this for a long time. And there's a number of drivers for that pace and that level of innovation. One, in large part, that innovation and the disruption is being caused by fintechs. Today there are more than 20,000 fintechs, startup fintechs around the world in all different areas of the technology landscape. So in the US alone, there's about 9,000 startup fintechs. In Europe, Middle East, and Africa, there's about 7,500. There's about 5,000 startup fintechs in Asia Pac. And again, they're canvassing the application landscape. Mm-hmm. For sure in payment processing and mobile wallets, we see it in retail investing. We see a lot in core banking and infrastructure and wealth management, a lot around personal finance and savings, digital banking, lending, around regulatory and compliance, and real estate and insurance and so forth. And then also, we see innovation in the form of digital transformation and so forth coming from the banks as well. It's interesting, what we see in large part from the banks, from our customers, is more and more they're outsourcing their non-core functions to fintechs and available services so that they can focus their efforts or innovation around differentiation. What are the things that they can do that's differentiated, that can really make a difference for the bank, and then outsourcing the non-core functions. And I think it's pretty consistent that all of the banks, the larger banks, but really all the banks recognize the need to move faster now based on what's happening with the pandemic and the ability to compete better with startups and with other banks. So there's a lot of focus on agility and innovation. There's also a big focus on efficiency and automation. So using technology to bring down costs, right? So that's more critical now, I would argue, again, than at any time in the past. Even though assets under management are up, margins are declining, trading revenues are declining, fees are coming down. Over the last year, on the retail side, fees are going to zero. And so in large part, the banks are looking at technology and innovation and automation and digital transformation and efficiencies, using technology to do that, to help them become more efficient and bring costs down. Mm-hmm. The other thing that we see a lot of is around agility and increasing the pace. So speeding time to market, agility, being able to develop new services faster, being able to react faster in near real time to changes in the environment, to changes in the business. Another driver that we're seeing is coming in large part from the rapid change in customer expectations, mm-hmm. right? So it's like the Amazon effect. It's the same thing in financial services. So clients and consumers have come to expect a higher level of personalization, hyper-personalization, automation, ease of use, self-service. It's just like in retail, not retail banking, but retail, mm-hmm. right? We saw this a lot with brick and mortar companies that couldn't match the level of automation and customer service and customer delight that Amazon was providing, and customers left them for Amazon. Mm-hmm. And if they weren't able to match that level of service and personalization, they were losing customers, and not all of those companies made it. So, to answer your question, we see a number of drivers around the use of technology, driving data and technology and innovation. It's coming from startups and fintechs. It's coming from customer expectations, and it's coming from the banks themselves as they're looking to increase efficiencies and bring down costs.
Yeah, that's great. Yeah, I mean, between the increase in challenger banks, as well as that race to zero, as you mentioned, and an increase in customer expectations, especially now that everything's online, banks have a lot to contend with, for sure.
Yeah, absolutely.
So you've touched on this a little bit, but talk to me a little bit more specifically about what role technology plays with these trends and innovations.
Sure, technology and data all play a huge role in all of this. So for example, all of these fintechs, the 20,000 fintechs, for the most part, they're all doing something that is innovative or disruptive, and they're all using data and technology to make it happen as a competitive enabler and a differentiator. And so you know, even though the tech landscape is really diverse, and I talked a little bit about, you know, all of these different sub-segments where there's fintechs and innovation going on. The interesting thing is that from our perspective, we do see commonality among the underlying enabling technologies. Right? And so, I mean, I can talk a little bit about that. So even though, you know, there's 20,000 plus fintechs, they boil down to, you know, a relatively small set of types of technology and data. And, you know, the first thing that I would say is absolutely data. It's all about using data as an enabler, a competitive weapon. Inside the organization, you know, a lot of these larger banks, especially on the sell side, have thousands of different data silos where the data exists in different formats and so forth. And so the more that organizations are able to get a handle on all of their data assets, very often the more successful that they're able to be. So there's a lot of sort of latent value locked away in the data. And then, you know, from the technology side, one is around the enabling technologies around automation, and that can enable digital transformation. So automation, agility, you know, regardless of the space that you're in, you know, automating the mortgage origination and the lending processes, or banks that are moving from, you know, very high touch interactions to automated and streamlined digital banking and so forth. Around agility and speed to market. And I'll, you know, hopefully we'll talk more about that, but using technology, I mean, that's really changed in terms of services and microservices and the ability to leverage APIs and API management and services offered as a service where you can easily connect to them and orchestrate them. Hyper-personalization right now is really key. And so being able to personalize in real time, every interaction, you know, that has demands on the technology, but the technology landscape is providing the ability to do that. So again, it's around making use of data, but it also requires very high performance data management technologies. So things like real-time streaming technologies like Kafka, which is very common with our customers in all areas of financial services, using distributed in-memory technologies, in-memory data fabrics, the ability to hold all of this data in a high-performance way, so that in real time, you can take actions and make decisions programmatically and apply intelligence. You know, it's interesting, it's less now about data lakes and Hadoop. You know, 5 years ago, everybody was talking about Hadoop and data lakes, and you know, not so much anymore. And I think there's a big reason for it. Is one, you want to have access to data in a usable format, not just sort of stored without common metadata and semantic layer and transformed into a usable format. And the other is, you know, Hadoop is very much around batch processing, and there's really a move to being able to do things in real time, in near real time, at scale. Being able to consume external data and external services on demand, you know, is absolutely huge right now, and around open banking and things like that. And believe it or not, integration is still a big deal. You know, 20 years ago, so I've been in technology, in data management technologies and around financial services for a long time. And 20 years ago, integration was hot. And you know, integration is still a really big deal. You know, it's not new, but you know, the reality is it's still, by and large, a largely unsolved problem if you think about all of the different data silos that exist across, you know, a large financial services organization, and having it be in a useful format and integrated and transformed and harmonized with a, you know, consistent semantic layer and a metadata layer above it and a data catalog so that you can understand what data is available to you, and is it trustworthy, is it secure, and so forth. Also, it's worth talking about analytics, right? I mean, analytics is absolutely exploding right now. It's and for good reason, because that's another huge enabler. And from a technology side, companies now have the ability to run more kinds of analytics. So, artificial intelligence and machine learning and natural language processing on unstructured data and business rules and OLAP or business intelligence and cubes and things like that. So more kinds of data on much larger data sets with a much smaller processing window in real time or near real time to do all sorts of things that impact the business. So whether it's portfolio management, wealth management, the ability to run more simulations on more data, better risk modeling, the ability to run concentration rules. We have one of our customers that's running concentration rules on 500,000 rules in real time pre-trade before any of the trades execute to make sure that the trades are consistent with their requirements in terms of concentrations across the bank, for regulatory reporting and so on. And so there's more types of analytics that are available. There's more tools, there's more capabilities, Apache Spark and machine learning environments and things like that. And then the infrastructure to be able to run it on, you've got horizontally scalable, elastically scalable technologies. They make a huge difference in terms of being able to run more types of analytics on more data faster on commodity hardware. You can run it on-prem or in the cloud. You can run it in the cloud where you use the infrastructure on demand. And if you need to scale out on the cloud, you can scale out on the cloud and you scale back in again. In terms of deployment paradigms, it's much easier to be able to do these things with a reasonable total cost of ownership. Also around analytics, one of the trends that we're seeing a lot of is around what I'll call business user self-service. So, it's sort of a broad bucket, but it's being able to visualize the data and as a business user or a data steward or business analyst, and not a developer, not IT, being able to visualize the data, interrogate the data, analyze it, do what's called data discovery. Mm-hmm. And that's actually really important, right? Because who better to make these frontline, in the moment decisions than the people that are actually on the front lines who know what's going on with the business without having to, wait for IT and get it in the queue and get the results, right? Very often the business dynamics have changed by then, the market has changed by then. And then the last thing that I want to talk about around analytics is what some folks call operationalizing analytics or embedded analytics or operationalizing AI. Mm-hmm. That's all about, is compared with decision support, which is also very important, where I have data and analytics and, I can see retrospectively what's happening with the business and I can predict what's likely to happen in the business. Operationalizing these analytics means embedding them directly into processes, into workflows. So programmatically, the applications can make intelligent decisions based on real-time events, based on data, and based on algorithms, machine learning algorithms, predictive algorithms. And so, sort of a canonical example of that is credit card fraud detection, where, I have a tremendous amount of purchase messages coming in from point of sale systems, and you can't have a human in the loop. So you have to be able to programmatically determine the probability that a particular transaction is fraudulent in real time, and then take the appropriate action to either approve the transaction or not, and alert the vendor and delay the transactions and so forth. But the applications for that all over financial services, embedding these real-time analytics certainly in the front office, but in all areas of the business.
Yeah.
Oh, and then, sorry. And then the last thing that I would say is, no discussion about technology is complete without talking about blockchain. And so I did want to talk about that. Years ago, 3 years ago, 4 years ago, everybody was talking about blockchain. I mean, it was really high on the hype cycle. And so, that clearly has changed. We're hearing a lot less about blockchain than we did a few years ago. But, it's still early. And the reality is some use cases are emerging. Obviously, there's a lot of potential benefit around blockchain for clearing and settlement, for payments, especially cross-border payments, cryptocurrency. One of the use cases that we're involved with right now is the FCA has this Digital Regulatory Reporting Initiative, DRR, where they're automating regulatory reporting for the consortium of banks, and they're incorporating Hyperledger into its reporting rules. So it's still out there, and there are production use cases, but I think it's still early for blockchain in terms of high volume production applications running in production.
Yeah, certainly. Yeah, it's interesting how it has kind of dropped off, but it's still certainly on the map. And I think as people start to disassociate it with Bitcoin itself, they kind of forget about the risk and start to realize the benefits, as you were saying.
Yeah, that's true. And, all of these different technologies, so, thousands and thousands of different options, right? I mean, it's definitely good, but, it's a two-sided coin. Right. I mean, it's good that there's lots of best of breed technologies and there's lots of innovation going on. So for sure, that's great. But, the flip side of that is for organizations that are, really trying to do, real production work. It can be really hard to navigate the landscape. Right. So, I mean, there's so many options. Like, what do I choose? So if I go on, the major public cloud marketplaces, there's hundreds of different products and services that I can choose from. There's computing, there's storage, there's networking, there's database, there's analytics, there's application services, there's deployment, there's management, there's mobile developer tools, there's IoT. I mean, there's so much to choose from. And so we hear that a lot, is that, it can be really complex. So for an organization that's looking to build an application, they probably need a lot of different types of technologies. And so, if they need to go and choose and make good decisions, right, because you don't want to have something that's the weakest link in the chain of a sophisticated application, and then they need to stitch together different products and different technologies, and they have to worry about interfaces. Do I have the right version? Do I need to upgrade? Do I need to maintain the interfaces? It could be really complex, both in terms of development and ongoing maintenance. And, we hear that a lot from companies that have either, very sophisticated applications or a number of different initiatives across the bank, or at the larger fintechs where there are a number of different spaces. They're actually looking to simplify their infrastructure. Mm-hmm. Right? They're looking to go in the other direction. They're looking to very often reduce the amount of technology, reduce the number of moving parts within their organization, right? And they look at all these technologies. Are they all at the right maturity level? Do they provide the required levels of security? Mm-hmm. What happens with the different products and interfaces when they need to scale? I'll just give you one example. Back in March of this year in 2020, when it was one of the big market spikes and the market surged unexpectedly, which it does from time to time. Yeah. A number of the new fintechs had outages of their trading platforms, and for one in particular, a very large one, it was catastrophic. So I mean, I will tell you that a lot of these, from our experience, a lot of these companies are, looking to modernize their tech stack. One, without doing a rip and replace, but also, being able to leverage their previous investments, but also they're looking to simplify their tech stack and not to bring in a lot of new technologies to do these kinds of things. And so I'll give you one example, and of course, this is where we play at InterSystems. It's what the market calls a data platform, or a modern data platform. And it's a single product. It's a single architecture. It's not bolted on, built from the ground up with a single consistent architecture that provides a lot of these capabilities without having to integrate different services from different vendors, or even if they're from their same vendor, having to integrate different services. You don't have to move data around. And it incorporates embedded database management, both for relational models and non-relational models. You may want to use document store in one place, and relational and SQL access in another, key value stores and so forth. Integration and microservices and API management and advanced analytics and business rules and AI and machine learning, all embedded, all incorporating the latest in architectural innovations in terms of high performance and using in-memory computing and horizontal scalability and elastic scalability and cloud support. And a really big deal is a single security architecture, especially now, as services are opening up and you have public APIs and open banking and things like that, right? Security is absolutely critical. So by having, all of these available in terms of, one, simplicity and lowering complexity and the number of moving parts, but also having a single security paradigm and not having to move data around is a really big deal. So anyway, so that's what we're seeing now in the market. In large part, banks are outsourcing what's not critical to other players, to fintechs, so allowing them to innovate internally. They're looking to modernize their tech stack while at the same time simplifying their tech stack, while at the same time lowering their infrastructure costs, lowering total cost of ownership, especially in light of trading revenues coming down and margin compression. One thing that I would offer is I would suggest to direct you to another Finovate session that from one of my colleagues. It's Monday, November 23rd at 2:15 Eastern time. And it's about how financial services companies can use a modern data platform to simplify the development and the execution of machine learning algorithms. So how to take all this data that you have and make sense of it and be able to use machine learning without necessarily having a big team of data scientists, and then both for sort of batch analytics, understanding and being able to predict what's going on in the business, but also the ability to embed those machine learning models directly into real-time automated processes like I talked about in the front office and for fraud detection and so on. And the title of that session is the 7 steps to implementing machine learning in financial services.
Okay, great. Yeah, we'll be sure not to miss that one. Perfect. Well, so the pandemic has kind of been peppered throughout our conversation so far. And I'd like to dig a little bit deeper into that. What have you learned from the recent pandemic, and is it changing the technology and fintech landscape?
Well, I mean, that's certainly top of mind. First of all, in terms of remote work, organizations have really had to figure out how to make it happen in terms of remote work and remote data access and security and so on. So that's big. But what we see in terms of the major initiatives that were happening in terms of digital transformation and so on, I would say it's not a drastic change. It's more of an acceleration.
Mm.
Yeah, so, the innovation and the projects and the digital transformation, the automation, and trying to incorporate machine learning into the business, and the personalization and the hyper-personalization and the streamlining and automating end-to-end processes. It was happening anyway, but I think this pandemic has really accelerated those initiatives that were on the roadmap anyway, both with fintechs as well as with enterprises. And I will tell you, we see that with capital markets, we see it with commercial banks, retail banks, insurance companies, credit unions, and so on. They continue to try to find ways to make more use of the data that they have to improve the business. In some cases, we're seeing the accelerating the move from high-touch in-person banking to direct banking, personalized automated banking. Certainly in terms of the move to digital payments, as everybody's moving away from cash.
Yeah.
And then, we talked a little bit about what happened back in March. So, for some companies, especially where they have to deal with volume and volatility in the markets, they're really making sure that they're ready for unexpected volume and volatility spikes. One of our customers, and I talked about at the outset, they're an investment bank. They're one of the top investment banks, and we've been powering their order management system, for about 15 years with older versions of our technology, and then obviously now they're on the current version of the technology, and they've never had a problem. They've never had a hiccup. Wow. Even when volumes spike by 2x and 3x. And the managing director of order management technology, we just had her speak at our annual user group meeting that was virtual this year, of course. And she said, again, they had no problems, but many of their clients, many of their enterprise clients were calling her because they were having problems handling the volatility and the spikes, to ask how they built their order management platform and how they were able to handle this. All right, so I mean, I would say, in terms of the pandemic and what we see now, at the end of the day, obviously as painful as this current environment is for all of us, at least the bright, potentially the bright side is, the acceleration in the advancement in digital transformation and rolling out new services and automation ends up being good for customers. And, at the end of the day, what's good for customers is good for the industry. And it's possible, just like in retail, that not every company will successfully make this transition. But for those that do, they can expect that they're going to see higher customer satisfaction and higher revenue and lower costs, and at the end of the day, that's a good thing. Yeah,
definitely. Great. Well, Joe, thank you so much for your time. This has been very insightful. Again, Joe Lichtenberg is Director of Industry Marketing at InterSystems. As Joe alluded to, InterSystems is one of our sponsors for our upcoming Finovate West show, which will be held November 23rd through 25th. Joe, thanks so much again, and thank you for watching.
Thank you so much.